EVLV has been on a tear, reinventing big venue security with AI as the market finally wakes up. The stock is Evolv Technologies, ticker EVLV, and as I'm recording this, it's trading around $6.66 a share. So what exactly are they building? Why is the stock ripping higher? And what are the risks that could still blow this up for late investors? Let's break it down. Quick reminder, this video is for education only, not financial advice. Penny stocks are very risky and you can lose money. Always do your own research. Alright, let's talk about what Evolv actually does. Evolv's flagship product is called Evolv Express. Think of it as a smart screening gate for places like stadiums, arenas, theme parks, and schools. Instead of the old metal detector experience where you empty your pockets and stand in a slow line, you just walk straight through. Behind the scenes, their system is using AI to distinguish between everyday objects and potential threats, so a phone, keys, or a water bottle are ignored, while something shaped like a weapon gets flagged for a security guard to check. The big selling point is throughput. Evolv claims its systems can screen thousands of people per hour. For a packed NFL game or a sold-out concert, that's a huge advantage. Shorter lines, less frustration, and potentially more ticket and concession revenue because people actually get inside on time. And this isn't just a prototype in a lab. Evolv's tech is already deployed at major sports stadiums, big entertainment venues, and a growing number of school districts. That real-world footprint is a core part of why the stock has so much momentum right now. So let's talk about the bull case, why the market is bidding this thing up. Reason number 1, hypergrowth. In their most recent quarter, Evolv reported revenue growth of well over 160% year over year. For Wall Street, that kind of top-line explosion is like catnip. It tells investors there's strong demand and a huge runway ahead if they keep executing. Reason number 2, social proof. When the NFL, MLB, and major theme parks choose your product to move tens of thousands of people through their gates, that's a serious vote of confidence. It signals that the tech works in high-pressure, high-stakes environments. And once a few big names are on board, it gets easier to sign the next 1,000 customers. Decision makers at other venues can point to those early adopters and say, if it works for them, it might work for us. Reason number 3, recurring revenue. Evolv isn't just selling hardware once and walking away. A growing chunk of their business comes from software subscriptions and ongoing services. That kind of recurring, high-margin revenue is exactly what investors love because it creates more predictable cash flow over time. Put all of that together, explosive revenue growth, blue-chip customers, and a subscription model, and you get a stock the market is willing to reward with a rich valuation. That's how you arrive at EVLV, trading up around $6.66. But no stock goes straight up forever. Let's shift to the bear case. What could go wrong from here? First, profitability. Evolv is still in heavy investment mode. They're spending a lot on sales, marketing, and research to grab as much market share as they can. Revenue is surging, but the company is still losing money. Bulls will argue that this is exactly what a high-growth company should be doing. Spend aggressively now to dominate the category, then harvest profits later. Bears look at the same numbers and say, show me when this actually turns into sustainable earnings. Second, the controversy around effectiveness hasn't vanished. There have been questions and reports in the past, raising concerns about how reliable the system really is in edge cases. Right now, the market seems comfortable looking past that as deployments grow. But if a new, credible negative report hits, or if there were ever a high-profile incident at a venue using Evolv's tech, sentiment could flip very quickly. When your product is tied directly to safety, the downside of bad headlines is huge. Third, valuation risk. At these levels, EVLV is no longer a quiet under-the-radar story. A lot of good news is already priced in. For the stock to keep marching higher, Evolv has to keep delivering big growth numbers and show a clear path toward profitability. Any stumble on growth, margins, or guidance could trigger a sharp pullback. So, what's the verdict on Evolv Technologies at $6.66? On the one hand, you have a company leading a very real shift toward AI-powered, frictionless security already embedded in some of the world's biggest venues and growing revenue at triple-digit rates. It's exactly the kind of narrative that momentum investors love. On the other hand, you're paying up for that story. Evolv still burns cash. Questions about effectiveness haven't completely disappeared. And the valuation assumes they'll keep executing almost perfectly. To me, EVLV today looks like a classic high-growth, high-expectation stock. The upside is tied to how big this category can get. and the downside is tied to what happens if growth slows or trust in the tech is shaken. Is this an AI security leader that's just getting started or a story stock that's starting to price in perfection? Let me know what you think down in the comments. If you found this breakdown helpful, tap like, subscribe to Penny Stock Pulse, and turn on the bell so you don't miss the next deep dive. Thanks for watching.